people are focused on the Clarity Act and they're focused on the regulatory side. And tokenization to me is the bridge between these two worlds merging together. It's why I said I have a 40 name index with 6 public companies, 34 tokens. I believe the merge is happening through tokenization. The most important thing of tokenization gets into one other thing about the value of things, which is there's, let's say, somewhere between, let's just say $700 trillion of fiat assets on the planet owned by households. 2/3 of that is in illiquid assets. Now, right now, you can borrow on illiquid assets. You can borrow on house, you can borrow on real estate, but they are illiquid. The thing that will change in my mind with tokenization is those dormant assets will become liquid.
Today's crypto headlines are dominated by one question. Will the United States finally pass the Clarity Act? After years of regulatory uncertainty, that answer appears to be getting closer by the day. Reports suggest as many as 7 to 10 Democrats are prepared to support the legislation, dramatically increasing the odds that the bill reaches the finish line. At the same time, the SEC has signaled that it is prepared to move forward with crypto regulations even if Congress fails to act. In other words, one way or another, the regulatory fog surrounding digital assets may finally be lifting. But while investors are glued to Washington, Jordi Visser believes something even bigger is already underway. In his view, the real story isn't just regulation. It's tokenization. Behind the scenes, traditional finance and crypto are beginning to merge into a single financial system. Stocks, bonds, real estate, private markets, stablecoins, blockchain networks, and digital assets are increasingly moving toward the same destination. The Clarity Act may provide the legal framework, but the technological transformation is already happening regardless of political timelines. What makes this moment so important is that multiple technological revolutions are colliding at the same time. Artificial intelligence is accelerating productivity. Blockchain technology is digitizing ownership. Tokenization is unlocking assets that have remained trapped inside legacy financial systems for generations. Most people are looking at these developments separately. Visser argues they're all connected. And if he's right, Bitcoin may be positioned at the center of a financial system that looks radically different from the one we know today. If you enjoy videos that connect the dots between Bitcoin, AI, macroeconomics, and the future of finance, make sure to like the video, subscribe to the channel, turn on post notifications, and let me know in the comments whether you think the Clarity Act changes everything for crypto. Now, let's hear what Jordi Visser had to say.
What Bitcoin solves for me is the distribution of wealth problem. Now, that's a big statement. That is the major problem in the world, but that goes back to my time in Brazil where I could see people so poor. But how could it possibly, it took me time to understand, but the democratization of access to assets, the democratization of access to the benefits that come from innovation. Because right now it's in the hands of people that publicly say, and I remember the first tech individual who said this, I have so much money, I couldn't spend it if I lived for 1,000,000 years. So when you get into the point, there's 2 ways for that to happen. They can keep handing it down to their kids, and that ends up filtering into Bitcoin because they have different beliefs. But the other way it happens is what AI does is it destroys value. It destroys moats. It allows for instant competition of anything, which is always at the end the law that has dominated capitalism in the distribution of wealth, which is scarcity. The value of any asset is based on its scarcity. And so for Bitcoin, when I heard about scarcity and I thought about the fact that, well, what's the value of real estate if AI gets us to a point where the cost of building a house is 0? What is the value of a home? What is the value of real estate if humanoids are building it? I could go down so many different paths. How do you know that a Picasso is a Picasso if you have 1,000,000 Picassos that all look exactly the same? And if they were tested by anybody, the only thing you have is a piece of paper, which, unless it's on the blockchain, can be doctored as well. So every single thing for me became, oh my God, that's what technology is. We solved for money. And if you go back to what the money problem was, we couldn't get to the point where it was immutable. We couldn't get to the point where we could solve that what you had was real. And so that's where I go. It's the problem of the distribution of wealth that it actually solves, and it makes the world a different place when we get into abundance. There's more to it than that. I actually believe that what Bitcoin is about is time. And if time with AI goes to the point that competition is infinite, as Eric Schmidt said at a very famous now meet or not meeting, but sat in front of a classroom in Stanford in 2024, I believe, with Eric Brynjolfsson. And he literally said, you could create TikTok within minutes and replicate what they do. You could send it out and have millions of viewers. Just look at how things go viral. And then you would take their business and it would be that community that would migrate to this. We've been forming communities with social platforms. So my whole belief was that AI would disrupt capitalism by the function of costs going to zero, but at the same time, businesses springing up and then collapsing and springing up and collapsing. And that's why for me, as someone who grew up in the traditional finance world, when I create a 40 name token index with 8 verticals, which is what I've been working on for the past 6 months, to prove to people that Bitcoin is just the S&P 500 of the future. And I'm starting to merge now public companies with tokens because there's enough public companies now like Circle, like PayPal, like Robinhood, companies that are half or a quarter in crypto. And that's what tokenization is going to bring. So Bitcoin for me was the end result that if everything moves really fast and competition is instant, then the only thing that's left is a store of value that will be here in 50 years. And right now, that store of value in the TradFi world is the S&P 500. If you asked 100 people, where's the safest place to put your money if you're trying to get a 15% return, the S&P 500 is going to be the place around the globe that people are going to say, and that's where people have most of their money. Well, if in the future that is Bitcoin, which I will believe it will be in a decade, on the path there will be lots of realities that come in with what I said, which is about competition and scarcity.
As Visser sees it, Bitcoin's role extends far beyond price speculation. His argument is that artificial intelligence is driving the world toward a future where competition becomes nearly instantaneous, business advantages become increasingly difficult to defend, and scarcity becomes one of the most valuable economic properties left standing. In that environment, Bitcoin's fixed supply and durability may make it one of the few assets capable of preserving value across decades of relentless technological disruption. But if Bitcoin represents the destination, tokenization may be the bridge that gets us there. And according to Visser, that bridge is already being built. The next phase isn't just about digital assets competing with traditional finance. It's about both systems merging together into a new financial architecture where ownership, liquidity, collateral, and capital formation operate very differently than they do today.
As people are focused on the Clarity Act and they're focused on the regulatory side, tokenization is happening. Like it's happening now. And I was at the New York Stock Exchange last month for a tokenization event. I spoke in front of a bunch of Korean brokers and a bunch of other people speaking on tokenization. And tokenization to me is the bridge between these two worlds merging together. It's why I said I have a 40 name index with 6 public companies, 34 tokens. I believe the merge is happening through tokenization. The most important thing of tokenization gets into one other thing about the value of things, which is there's, let's say, somewhere between, let's just say $700 trillion of fiat assets on the planet owned by households. 2/3 of that is in illiquid assets. Now, right now, you can borrow on illiquid assets. You can borrow on house, you can borrow on real estate, but they are illiquid. The thing that will change in my mind with tokenization is those dormant assets will become liquid. When they become liquid, the question is that a good thing or a bad thing for those assets? I think they're going to be used as collateral, but one of the things that makes housing go up is if one transaction happens on your block and it's 10% above the prior price, then all the houses on the block go up in value and everyone can go borrow off them. But there's no liquidity if everyone came into the market. The market is going to now evolve with speed of AI and consumer agents where liquidity is going to be valued at a much higher level than it used to be. And so things that are liquid will get a much higher haircut on collateral. And that's where Bitcoin becomes the collateral of the system. And if all of a sudden it has a better collateral, think treasuries in the US, well, then there's value to holding them because people will lend against them because they're liquid. If you can't borrow against a real estate the same way you could, or there's a haircut because its bid offer spread is not the same as Bitcoin, I think liquidity becomes a very important thing when agents are making decisions rather than banks. And that's the one part about Bitcoin. It's a very deep liquid assets that trades 24 hours a day. There's nothing else like it on the planet. Liquidity will become a much higher valuable thing as we move forward. In the United States right now, the majority of money that humans have in the banks gets no interest. And that's because they're in the too big to fail banks. Why is there so much money in zero yielding instruments? Why isn't everyone moving to money markets? I mean, it's happening slowly, but why is it not happening? And I remember when SVB was going out of business and I was managing a bunch of portfolio managers, and the guy managing the banks, I said, so there's withdrawals happening. What's going to stop them at all the banks? And he said, oh, very simple. These companies can't take their money out of the banks. They can move them all into JP Morgan and Bank of America, but they can't move them out because they got to pay bills. Mm-hmm. So the first thing is, Mark, on this, if you have tokenization and you have stocks that settle the same day into cash, well, then if you're in a Starbucks and you buy a coffee, you can pay with it with anything that you own in your wallet. It doesn't have to be just a credit card with money. So it not only breaks down the intermediaries, it brings instant cash settlement to everything. The second thing it does, it brings instant price discovery, which should eliminate what we're watching with private credit right now, what we've watched with private equity, what we've watched with, people forget this, we're watching one of the biggest unwinds in history of things being mismarked. So when you're in a fund and you hear, oh, I'm picking you, I'm giving you payment in kind, it gets rid of all of that stuff. Tokenization clears up one of the biggest things that people don't realize, that why, when you invest in a hedge fund, should you not get your money back for a year? Why should you have it locked up for 5 years? Well, that's because we're in illiquid assets. In tokenization, theoretically, there'll be price discovery for every asset. And if everything has a bid-offer spread, then you no longer can hide behind the marks of just marking it to some model thing. So I think there's a lot more nuances to, again, this thing of time. And all that you have with illiquid assets is, I don't need to sell it now, but if I needed to sell it, I'll send out pieces. And so it hurts retail in the end. And we're seeing that with private credit and all the times that they go to retail to borrow money. Democratizing asset ownership to anyone, meaning no matter how much money they have. So if I'm a young person and I make $100 a month because I'm still in school, but I want that money to earn interest, like I want to be able to invest it, and I've got a long time horizon, I can't go invest in a hedge fund. I can't go invest in a private equity fund. I can't go invest in any of this stuff. With fractional ownership and consumer agents or agents, and you put your money in, and then you say, here's what I'm targeting over the next decade. I want to have a high risk portfolio that makes 15%, that errs on the side of 15%. I'm only to take a little bit of leverage, go distribute this in the most risk. You can see where this gets, like the optimization that'll be done by an agent to just put that money to work. So theoretically, you should always be optimizing for the return to risk ratio that the person putting the money in is there. A person who's poor can't get out. They can't do anything with it.
What makes Visser's thesis so compelling is that it doesn't rely on Bitcoin replacing everything overnight. Instead, it focuses on how the financial system naturally evolves when technology removes friction. For decades, trillions of dollars have remained locked inside illiquid assets, accessible only to institutions, wealthy investors, or those willing to navigate complex financial structures. Tokenization has the potential to change that by bringing transparency, liquidity, fractional ownership, and real-time price discovery to markets that have historically been difficult to access. This is why the Clarity Act matters so much. While the headlines focus on regulatory certainty, the bigger picture is that regulation creates the foundation upon which these new financial networks can scale. The legislation itself isn't the revolution. It's the infrastructure that may allow the revolution to accelerate. Whether it's tokenized stocks, tokenized real estate, stablecoins, digital collateral, or entirely new forms of ownership, the direction of travel appears increasingly clear. And throughout all of this, Bitcoin occupies a unique position. AI may reduce costs. AI may disrupt industries. AI may create and destroy businesses at unprecedented speed. But none of those developments change Bitcoin's supply schedule. They don't create more than 21 million coins. They don't dilute its scarcity. If anything, a world defined by rapid technological change could increase the value of assets that remain predictable, transparent, and resistant to manipulation. That's ultimately the conclusion Visser keeps returning to. The future may belong to tokenized assets, AI-powered markets, and automated financial systems, but the foundation supporting that future could very well be Bitcoin itself. Whether tokenization expands to trillions or hundreds of trillions of dollars, whether regulators move quickly or slowly. And whether AI transforms every industry or only a few, Bitcoin appears positioned to benefit from the same forces reshaping the global economy. If you enjoyed this video, make sure to hit the like button, subscribe to the channel, and turn on notifications so you never miss an update. Also, share this video with anyone trying to understand where Bitcoin, AI, tokenization, and the future of finance are heading next. Thanks for watching, and I'll see you in the next video.